Hi, if you're looking at making big changes, you need to focus on the big items. So we're going to look at interest and interest deductible and how you can improve that, and I've got three big items to look through. If you're trying to get ahead in property investment, make sure you've checked out my recent live video, which is on low-hanging fruit. There's some great information on there and some great ideas, simple ideas to get ahead immediately. So the first thing we look at with interest is your interest rate. It sounds really basic, but a lot of people just take the standard interest rate that the bank gives them and they accept that, and then they pay that interest rate for the next 20 or 30 years. Best starting point is to have a look on www.interest.co.nz, and you can look up what all the standard rates are from all the banks. The second thing I would do with them is then negotiate on them. Just because a bank is advertising a rate of 4.8% doesn't mean you can't negotiate and get lower than that. There's a couple of little tricks that I would normally use. One is use a mortgage broker. They're normally in the best position to get you a refund, to get you a lower interest rate. Another one is to join something like New Zealand Property Investors Federation, where you can get a standard discount with ANZ. And the other one, just ask your bank. Blame someone like your accountant. Say that your accountant has told you that you should get 0.25% off the standard fixed rate and maybe 0.5% off the floating rate. And blame it all on someone like me and see if you can get a lower rate because of it. The second big item I'm going to look at is, can you move debt from your personal house to the rental legally? So there's a couple of ways that you can do this. One of my favourite and real easy ones is looking at, do you have a current account in your trust or a current account in your company? And this can work for businesses or rentals. So say your company owes you 100,000 shareholders current account, and you've still got a personal mortgage. What we would look at doing is borrowing the 100,000 within the company. The company then repaying that to you to repay your shareholders' current account, and then what that's done, it's moved it from 100,000 non-deductible interest to 100,000 deductible within the company. You need to make sure you follow the right process. So if you're a client, we've got standard letters that we can send you setting out what is that process, and we've also got standard minutes that can be changed for when and how much you've borrowed to repay the current account. So that's real simple, easy and relatively inexpensive way to move more of your debt from your personal house to your rentals and getting more of a deduction for it. The second sort of idea that you can look at with moving debt from your personal house to the rentals is a restructure. So generally this might be that you own a personal house and you want to make that a rental and then buy a new personal house. So we might sell your existing personal house to something like an LTC, a look-through company, and that way the LTC buys it for the full amount, it borrows the full amount, so you have a 100% mortgage, and then you take away the money and use that to reduce your personal house debt. We just did a recent blog on this, so if you look on our website, under the blogs you'll see a recent blog that we did on this topic and how to be more tax effective around it. Another restructure might be that you've got one property in an LTC and you've got one in your personal name with good equity in it. So we might have a commercial reason of being able to sell your personal house, the rental in your personal name to the LTC, and the commercial reason would just be simplifying, getting down to one structure that works better going forward rather than having two different structures and two lots of costs. In that case, again, if we sell it to the LTC, we should both borrow 100%, and that makes it more tax deductible and more tax effective. My last point about interest and the big items we're looking at is, how can you get the debt down? Sounds real simple, but some real good ideas is just focus on paying down a bit more principal. Whatever the standard payment is, try and pay a little bit more so you pay it off quicker. If you get bonuses or extra payments, pay those into your principal to get it down quicker. If you're not paying principal on your rentals, I suggest you do, and if you have a look through our blogs, we've got an article on why we suggest that as well. Another option for your personal house or for rentals could be maybe you can subdivide off a back section, sell that off to reduce debt as well. So hopefully you found that of use, and hopefully you can focus on one of the major items for all property investors, which is interest and debt. And yeah, if you like our information, make sure you like our Facebook page. We've got a lot of great videos and blogs coming up all the time. Look through what some of the old videos are. There's a few great ones in there, like some of my favourite ones are the property investor you don't want to be. Also just simple ones looking at do you need to sell a rental to get ahead? Also, yeah, a few good blogs like the repaying principal on your mortgage, the restructuring if you've got a personal house becoming a rental. So make sure you've signed up for our newsletter and like our Facebook page and keep getting us great free information. Thank you.